Joining us now is Lisa Shalett, Morgan Stanley Wealth Management Chief Investment Officer. Lisa, it's great to have you on, especially on a day like today where after the jobs report came in, at least the top line number came in softer than expected. We've seen that 10-year yield tick lower, but it has been just a dramatic move over the last couple of weeks. So what does that mean for stocks from here?
Well, look, our best guess is that the Fed's going to have a hard time with these numbers. I know that the market has been obsessed with the speedy recovery and headline CPI, but today's wage numbers on a total miss in the number of jobs created, I don't think is going to give the Fed a lot of encouragement that the core of inflation is going to move down anytime soon. And I think when you put that together with some of the other factors that have emerged over the last week, whether it's the size of U.S. Treasury issuance, whether it's the Fitch downgrade, whether it's, the pressure on global bond yields from the Bank of Japan lifting yield curve control, all of that is speaking to the potential for rates to be higher for longer. And as we know, the United States stock market has shrugged that idea off all year. And at some point, I do think valuations matter. One of the things we're pointing out to folks is, look, even if you want to be really optimistic about next year's earnings, 250, let's say, which is well above the published consensus, you put a 19 multiple, which is one turn lower than the current 20, you're basically at 47.50 roughly, which isn't that far away from where we are. It's an upside to the stock market of 5 to 6% in the next year. That feels and smells an awful lot like what I can get in a 3-month Treasury right now.
Okay. So what does an investor to do then? How would you be counseling clients right now?
So our fundamental positioning is that if you want to be in the stock market because you believe the soft landing thesis and you believe in reacceleration in the economy, do it with a more value-oriented parts of the market, industrial, cyclicals, financials, some consumer discretionary names, even some residential real estate names and the like. If you want to sit in fixed income and get paid to wait, as we said, we think you're going to have some reasonably competitive returns if they only, even if they only come from coupon. We also love ideas outside the United States. Right. So whether it's owning some Japanese stocks, owning emerging market stocks, those are ideas. And we like holding commodities here. I mean, again, against all the brouhaha about how great tech earnings are, all of the folks who think inflation is over don't seem to have noticed that commodity indices have backed up by double digits in the last 3 weeks. Ultimately, that is going to touch headline inflation. Now, of course, we can dismiss headline inflation next month if we don't like the message and go back to looking at the core. But as I said, I think today's wage numbers suggest core may be flat again.